Welcome back, everybody. So this is going to be the watch list for Monday, January 19th. Now, do note that on Monday, January 19th, we actually have a federal holiday, Martin Luther King Jr. holiday. So the markets will be closed. The stock market will be closed. The bond market will be closed. And everything will resume Tuesday morning. So, good news is we don't have any new news to drop on Tuesday. And then Wednesday's really light. So all we have is construction spending and pending home sales. So nothing that I'm anticipating is going to move the market. Now, Thursday, we do have a lot of data. So we have jobless claims, we have revised GDP, personal income, personal spending, PCE, core PCE. Now, these numbers are going to be from November. And the one thing that we saw with the producer price index, the PPE, is that inflation year over year of goods and services going into the manufacturing process are going up. And then I can't help but to think that's what is going on with rare earths, right? Gold, silver, platinum, palladium, they're trading at all-time highs. Well, we use some of those metals, not gold, right? But we do use copper, for example, goes into a lot of the manufacturing process. So if copper and palladium and a lot of the metals that are used in goods and services is increasing, especially in automobiles, right? Even iron ore or steel, right? If that's going up, what's going to happen to the overall products? They're going to go higher. So I think that's still a disconnect that the market has to solve. And then we're watching this huge rotation into energy, right? The Mag 7 are not moving higher, clearly. NVIDIA is holding its own. Microsoft has been getting trashed. Apple has been coming down. Amazon is trading within a range. We're going to look at all those individual stocks, but they're not making new all-time highs. Software has been taking a hit across the board. So whether you're looking at like an Adobe or a Microsoft, Salesforce, I mean, they're getting hit hard in the fear that AI is going to disrupt their business models. So the chip trade is still on, okay? Micron has been flying. AMD, the overall semiconductors are really, really strong. SMH, the semiconductors, hitting new all-time highs. So Thursday, let's watch the inflationary data. And then on Friday, consumer sentiment. And then we have more PMI. Now, what could throw a little bit of a monkey wrench into everything come Monday, even though the market's closed, or into Tuesday for trading, is going to be these headline numbers right here, right? Trump says 8 European nations face tariffs to 25% if they don't hand over Greenland. Here we go again with tariffs, right? So we'll see how the markets actually react to that news. Now, let's also take a look at earnings that we have coming up this week. We had big banks last week. Regional banks is going to be this week. So we have U.S. Bank Corp, we have Key Bank, Mercantile. We also have some of the brokers, right? Interactive Broker, Charles Schwab will be coming up this week. We have Ally. So the rest of the financials, and then in another week, we'll start to look more toward the tech stocks, right? What's going to happen with Apple, Google, Meta, Microsoft, NVIDIA, so on and so forth. So we do have a robust week. We'll want to see what the regional banks say, and we're going to want to listen to commercial credit. Okay, so what you have right now this year are going to be over $1 trillion of loans that are repricing off the COVID lows. So the other one that I'm going to watch closely is going to be Netflix, right? Trading 33% down from its all-time high, and that was after the stock split. So the question will become is, are investors going to step in and buy this hand over fist? Now, the options market is believing that it's going to move either 7 to 8% to the upside or to the downside. There's been a lot of $90 calls being purchased, so I'm going to watch this on Tuesday morning to see kind of how that plays out. I am holding a long-term position in Netflix at 91, so I think what I'm going to do is I'm going to sell some out-of-the-money covered calls, right? 5% up. If it goes up 7%, no harm, no foul, right? But I'll be able to not only lock in the gain from where we're at, but also to that higher strike price. So we'll see how that goes. Let's go ahead and get into the charts. A couple things here that I do want to note is I have gone through and erased all of my price levels in all of my charts. So This market is behaving a little bit differently than what it did last year and the year before. So therefore, I'm going to start trading shorter term liquidity. But what I am using in confluence with that has been the fixed range volume profile. And for those of you that have been trading live with me, you've been watching me leverage it. So over here to the left in TradingView are your tools, and I've been using this fixed range volume profile. Now, I used to use it about 5 years ago, and then I kind of got away from it because we were just in a raging bull market, and it just kept going higher. So this seems to be a really good tool when we are ranging at all-time highs. So how does the tool work? I have it saved as a shortcut up here. But what you do is this is going to be the candle open on Friday for NQ, okay? And then I'll just take it and to the market close. And what you will see down here is volume by time of day, okay? That's this section down here. But what the fixed range volume profile shows you is volume by price, okay? Now, a couple of settings here that you need to note, that you need to change. You need to change your row size to 1,000, okay? And then your area volume should be 70. Now, if you're going to do more of a scalping strategy, you could change it to 30, but I would leave it at 70. Now, when you set this tool up for the current market and you do the first two candles, if you click extend right, it'll keep updating to the next candle all day long for you. So you don't have to keep changing the fixed range volume profile. But let's say you just want to use it for the first 15 minutes of the day, okay? You can just literally say, this is the market open, so 5, 10, 15. These are the first three candles. For the first three candles, where was all of the volume placed? Now, that's going to be relatively short-lived, right? Because what you'll see is, if I were to go ahead and take another fixed range profile, and you could overlap these, no harm, no foul, but let's see what happened as the day progressed. You could see that it actually started to move lower to the downside, okay? So again, all you need to do is, I'm gonna go ahead and erase that. My old fixed range profile here, where all the volume was, look at how it was pretty much where the high of the market was, okay? So another tool that you can use is take it for the first 15 minutes, and then if you want, just go ahead and throw a pivot in there, okay? Or, throw a price level in there. That's something that you could easily do just to say, well, I want to test this and see how it works. But this is where it would be for the first 15 minutes, okay? I'm going to make it a pink line so that you can see that. Now, let's go ahead and erase this. And then throughout the entire day, the fixed range volume, where was all the volume at for the entire market day, was literally lower than that, okay? But when we got above the line, where do we push up to? Where the point of control was in the morning. When we got above it again, where do we push up to? Where the point of control was in the morning. Now, what do these bands represent? The green and the red. So the red is going to be the high of the band, and then the green is going to be the low. Now, it's representing 70% of all the volume that has been traded for the day, okay? No, I do not want a fib level. So what I'm going to do and test this for the next, couple weeks. I've been running fixed range volume profile all day long. I've been trading against it, right? We get a 5-minute candle close below it, it pushes lower. We get a 5-minute candle close above it, we push higher. So I'm going to watch and see how this is observed in addition to liquidity price levels. Okay, so now my liquidity price levels, where are those coming from? Typically pivot high, pivot lows on the daily and the 4-hour. Now, you might not subscribe to that theory or that methodology, but in order for us to, retrace and go higher, we need to get above this liquidity level to go lower. We need to get below this level. Otherwise, we're just trading back and forth here. Okay, that's all we're doing. So, the simplest way for me to do it is just leveraging the supply and demand indicator that will auto draw these price levels for you. Now, just because you're in the green, which is where all the buyers are, doesn't mean that the market can't go lower. Clearly it can. But you could also see that when you have these overlapping boxes, and they're all time-stamped, that will tell you how strong the demand is, whether it's 1 hour, 45 minutes, 1 week demand, so on and so forth, your probability of going higher is better than the probability of going lower. Why is that? Well, what we would like to see is when we come down to a bounce level here where we're in overlapping demand, where do we want to go? We want to go up to where the sellers are, all the way up here, okay? So if we were able to, at some point in the day, get above this price level, this is where you could foresee yourself going back to the high of the day. Now, we didn't get that. So what's another tool that you can use? Well, supply and demand is super powerful, right? But the other thing you could do too is you could go ahead and do a fib retracement. So a fib retracement from a pivot high to a pivot low. Look at where we kept rejecting all day long. 25,741, the 50 fib. Now, is this 50% fib going to be very similar to the fixed range profile on the first 15 minutes? Lo and behold, it sure as heck is, right? Look at where we're at. The overall point of control, which is the yellow line, is in the golden zone, which is right where this candle rejected right here. Okay? So you got to get above the points of control where all the volume is in order for the continuation to keep going. Oh, that's my theory, right? You could agree, you could disagree, but that's how I'm charting. That's how I've been trading. And for me, it's been working out exceptionally well. Takes a little bit more patience, but just know that when you get to this 50 fib retracement, you should be pausing to say, well, I'm probably not going all the way back up here unless I could also get above the morning rebalance of the massive volume, right? Look at all the volume in the first 15 minutes, right? Nice big candles. Then you got two more candles of good volume. Then what does volume do? It dumps. It drops off. And then what happened to the point of control as this volume dropped as well? Again, longer time frame. Volume dropped, the point of control came down. So there's not any new buyers that are really pushing price to go back to high of day. So take it for what it's worth, but I would encourage you to think about how do you play around with these tools and how can they give you more or better knowledge of what the institutional buyer or seller is doing. So again, left-hand side here, here's going to be my fixed range profile. If we go up one, here's my fib retracement. If you put a star, it will then move it to the top of your charts. Okay, so these are going to be my price levels I'm going to trade this week on ES. And then I will adjust them, right? So if the market dumps for some reason, and I did go down quite a bit, right down to 2,000 points down to do my price levels. And if we were to go out on a daily basis and see where they're at, clearly they're at a lot of pivots, right? But those pivots are also aligning with my institutional supply and demand indicator. So I always chart with this off, and then I will turn it on. And again, the higher the time frame, the stronger the zone. The lower the time frame, 30 and 45 minutes, I just kind of ignore those and basically say, if we're dumping with strength, we're going to keep dumping. Now, if we get below 25,161, look at how we have no buyers until we really get back down here to 25,000, right? Very light buyers. Now, this is going to be really hard to push through. Doesn't mean they can't push through it, but if you want the best short opportunity possible, let it come below the level, okay? Let it come below your level, retest your level, head to the next level. Okay. So let's do this. Let's turn this off, and visually, can you see it? Right? I don't really like shorting into where there's a ton of buyers because that's where you get that short squeeze and you get screwed and you're trying to short here, okay? And then zhoop, it goes right back up. So these are going to be my price levels for NQ. I've also redone them on ES. You can see, again, I went down to about 6,800. Could I go lower? I could, but I don't need to. I don't think the market's going to really head that low for the, the current time being. But we also have a 9 above a 21. We're above the 50-day moving average, right? So where's my 50-day? Right here back at this checkpoint where I have a price level. Again, I could do the exact same thing and say, well, where is price likely to head to? It's going to be these major support and resistance zones, okay? So again, by trading this way, with the fixed range volume profile, it does give me confidence that these price levels, look good. And here, I'm going to actually add one on the 1 hour time frame that is actually aligning pretty darn good right here as well. And again, it's where we start to get into more of this supply. So I'm going to want to be cognizant as to where are we starting to hit some overhead resistance. Okay, and it's going to be, at these pivots, which is where price moved up into, and then it is failing lower. So we'll watch this. And again, I don't want too many lines where I have too much clutter, but I can see, right, that what I want to do is I want to be taking calls down here and puts up here. And then this line is only a 45-minute zone for buyers, so it's pretty weak. So the likelihood that we go down and test this candle low is a pretty high probability. Now, if we can push above here, look at how I don't have as much supply until I get back up here into the $7,000 range here. So that's how I'm trading this, and we'll see how it goes. And I can just adjust accordingly, okay? Let's go ahead and take a look at some individual names. As I said, I've redone all my charts to do exactly that. I do have my daily gap fills that are going to be in yellow. And again, I talked about this, right? Apple is weak. So if we go out to a 4-hour time frame and we zoom out, and again, I go ahead and look at my institutional, right? Supply and demand, where are the buyers and where are the sellers sitting? Where do I want to take the bounce? Well, I'd like to see if Apple's going to, come through the gap fill, okay? But if we get below 252.11, there's no more buyers till 248, right? Now, it doesn't mean that the market is going to go in a straight line down here, right? It's probably going to come down, it's going to come up a little, and then come down, and then come up, and then come down, and then come up, and it might go sideways for a minute, right? But ultimately, it's going to come down here and seek liquidity, which is where the buyers are. And that's why you got to keep your stop loss, right, 6 to 8 points away, and just let the market do its job, right? Now, where do I like calls? Well, calls for this, we kind of broke below my price level here where I would have gone short. So now, in order to go long, what I want to do is I want to get now above this overall supply that's forming right here. Okay, so I can go long if we really get above 257 to take it back into 261. Why is that? Well, because I don't really have as many sellers until I start to get up into this 259 area. Now, the top of a gap fill is going to be a very strong liquidity zone that they bounced it off of this, but then they closed on a red 4-hour candle, so it lost its momentum. So I'm going to look for Tuesday for Apple to keep heading lower and possibly get into this gap fill and fill it to then close it, go down to this next bounce area, and then if it doesn't bounce, lights out. Okay, so that's how I'm looking at Apple. Let's look at Amazon, and these are going to be all very similar, right? The strategy is all the same based upon liquidity zones. So, consolidation, right? So for me, I really don't have anything unless we get back down here. Now, can you come down in here and then take a call trade going up if the market is strong? Of course you can. But when is going to be your best call? When you actually get through the resistance up above to keep going to the next level. Now, this is going to take some patience, right, because of all this market chop. The other thing you do, too, if you're going to do a fib retracement, pivot high, pivot low, your reject is right in here somewhere, right? But this is just something I wouldn't want to trade because all it's doing is consolidating back and forth. Let's look at Microsoft. This is a different story in that we do have a gap fill below. It started to enter the gap. But we are, right, in a fair amount of demand. So where do I really like to go short in this, where you can put on some size? 447.30. So do I want to take calls? I can. Again, if the market is strong, I like them the best at my price level, which is going to be at also the top of the gap fill. Okay. But if we get any weakness, then this is going to be where I'm going to stop out. Now, I also, again, if we have a strong market because of tech earnings, look at how we only have 30 minutes supply overhead, 30 minutes here. 4 hours is pretty strong. This 3 hours is decent. But we could clearly start going hurdle to hurdle, right back to the upside. So as we get through this ceiling, use it as a floor. Go up, use it as a floor. Go up, use it as a floor. Okay, likewise, you're coming down, use it as a ceiling. Go down, use it as a ceiling. Now, am I going to want to be shorting down here Microsoft with all of these overlapping zones, week, 45 minute, 4 hour, 3 hours, so on and so forth? No. I'm going to look for a call trade down here to go higher, right, in confluence with QQQ. But if we break below, then I definitely want puts, right? This is something to watch. So what I can do is I can add an alert on this horizontal ray for the market to go ahead and notify me, right? We can do the same thing here at the top of the gap fill. Alert me when Microsoft gets to that gap fill, okay? Let's look at Google. And if you're trading Google, trade GOOGL. Do not trade GOOG, okay? It's the difference in the different shares, okay, the classifications. Kind of same thing. You can see where we're at, right? Lots of consolidation. There's really no trades for me here unless we get above 330.09. We get above this and we get above VWAP, right? We start to see the curl on the 9 and the 21, right? We could take it higher up to 334 and then up to 337. To the downside, right, I could take puts here, but the risk you're running is, look at when you're trying to take puts on this candle close, they wick you right back up. And then you try to take puts again, yeah, you got a little bit of a drawdown, but then they wick it right back up, right? So clearly when you are fighting with that there are buyers here, your win rate is just going to go down. You wanted puts up here, okay, or you wanted puts up here. And the nice thing with the software is it will tell you that the supply is developing or the demand is developing. So again, it is a wonderful tool if you just have patience and use it appropriately. Let's look at Tesla. So Tesla, similar thing. The purple box is going to be a 4-hour gap that was created. But this is kind of a balanced market, right? The buyers and the sellers. Again, just because you have buyers and sellers doesn't mean you shouldn't take a trade, but your probability of the trade goes down exponentially. So where do I really want to see us break below? Right, the bottom of this overall demand zone. And then we could go right back here to the next price level of 424. Now this has just been jigsawing back and forth quite a bit, but you have some at least price levels to trade against. Okay, and again, we can align all of this real easy, really fast, so that we know what to watch based upon a historical level. And again, it's very simply, right? Candle highs. You can see that we're trading literally right here in this zone. Okay, we need to break above it, but you just have way too much selling pressure. So again, I like puts below the level. We get down, we could then push even lower. So let's go ahead and save that. Let's look at NVIDIA. We do have a gap fill on NVIDIA below on a 4-hour time frame represented by the box. You could see that. Again, you can take calls here, but look at it just these trades aren't lasting, and a lot of these push-ups are happening in the post-market. Now, we are aligning pretty good here that with this pivot bounce, right? We get into the gap fill and we get some weakness in chips. This could definitely head lower. So now we really don't have any meaningful buyers until we get down here at 182, right? This is where the buyers start to step in, okay? And so this would be, if I was going to be short, a price level that I would like to observe. Now, I'm also going to be cognizant of this prior pivot here, right? Even though they cut through it, but look at where this ended up being the resistance, okay, right here. So this would be a price target 1. If we keep falling, I really like us going back through here down to demand. Let's look at AMD. Same thing. We have some purple boxes, which Iceman refers to these as rising windows on a 4-hour time frame. Okay, we got quite a bit of balance here. Buyers and sellers are in line, bouncing off the top of the gap, right? We do have a fair amount of, again, buyers down here. Now, do you have to chart these lower price levels? You should, right? But you're going to also note that this price level is right at the top of the gap fill, okay? So really don't see any weakness. I mean, I'd love for us to push through this and get down back to these 170s. Is that probable with Palantir trading at 231? Probably not right away, but I would definitely see that if we can come back down here and close this gap, this would be a great area to take calls, right? 220. An even better area to take calls would be down here at 214. So keep an eye on these higher level time frames, daily, 4 hour, 1 hour, to say, do I have a really good setup? So with that, everybody, you can do that again on all your charts. The fastest thing that I've been doing is just right-clicking, remove all my drawings, okay? And then what I'm going to start using, or I have been using for the last couple weeks now, especially with futures, and you can do it on an individual name as well, right? I mean, we could take, if you want to trade, for example, AMD, which that's what this is. Did I mistake and say Palantir? I did. My bad. Let's look at Palantir. I had one on my mind and something else was happening. Again, okay, so you can see your overall hurdles that you're going to have to get above to push higher. If not, this is where price is rejecting. And where are we heading? Down here to where the buyers are. We get below, right, this pivot, right? We're probably going to break this demand and you'll watch it in the software disappear. Okay, once all these buyers are gone, they're gone. And then where does it drop to? These other low-level time frames, 25-minute or 30 minutes and 45 minutes of buyers. And we break that. There's real no heavy buyers until we get down to 155, right? So this is where if you're getting in a put trade, okay, and then you just have to have patience and let, as Iceman says, gravity do its work. What is it doing? It's gravitating down here, but you're in this nice drop. Then you're like, oh my gosh, we're going higher. And then what does it ultimately do? Heads lower. It has to go find more buyers. Again, we can see the buyers down below. So that's pretty much everything I wanted to cover today. Just be patient, right? I think this market is taking a lot more patience than normal. Trust your charting, work on your charting. Work on your price levels. And again, I can't encourage you enough that if you're not using all the tools and the resources that are within TradingView, you are just making your job harder. So the actual supply and demand indicator is in the email that I sent out this morning for the watch list. And if you have any questions or you need help, let me know. That's what I'm here for. So with that, everybody, have a fantastic Monday if you're off. And we will see you all Tuesday morning for live trading. Take care.